Hi, folks. This is Sean Hyman from Chart of the Day, coming to you from Arkansas. It's the small rural area where I was raised up as a kid, and just wanted to talk to you today about watching the descending triangle to see which way it breaks. And this euro pound pair on the daily chart had worked its way up here in a very impulsive wave. Turned down here with a shooting star pattern. It's a bearish pattern. Typically shows a top, and then it made its way down into this corrective pattern here, where it had a B, C, D, E type of correction, and there's a huge chance of downward break. You can see that we're flirting with it now. This is being filmed on a Sunday, and it'll be to you in the next day or two, and you'll want to watch to see if this thing sucks back in and heads back to the other side of the triangle, or if it breaks and heads lower. It is possible to where it could still stand a little bit more time in the triangle, because the triangle can complete a little bit further before it breaks. But since we've had so many moves within the triangle already, there's a good chance of a breakout to the downside or the upside pretty soon. But the power of the descending triangle is that you get this coiling action of tug of war between the bulls and the bears. It goes back and forth. One side tugging, then the other side tugging. Eventually, one of the sides turns loose because they give out of exhaustion, and one side will clearly win. And that's why there's usually huge directional moves to the downside or huge directional moves to the upside out of these patterns once the pattern really does finally exhaust. A lot of people look at this as like a coiling pattern, like it's winding up, winding up, winding up, coiling tighter, 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 and then it springs out, to one side or the other. So the thing I like about these patterns, ascending patterns, ascending triangle patterns, descending triangle patterns, symmetrical triangle patterns, they all point to coiling, um, a coiling action, which is a tapering off of volatility, lessening and lessening and lessening volatility, which will beget very high directional volatility. So what you're getting here is range-bound activity, which will beget a trend to the upside or the downside. You're getting lesser and lesser and lesser volatility, which will beget huge volatility to the downside or the upside. But the nice thing that's nice about these is one, of course, the conservative trader can play these inside the triangle while the triangle is being formed, and also knowing that the longer they're in the pattern, the more they'll need to tighten up their stops and probably use fewer lots when they trade some of their latter trades in the triangle. But the aggressive trader looks for the breakout, and the breakout will be huge. The breakout will be directional in either direction and can be quite significant. Many times the breakouts will equal minimally the depth of the pattern, of the broadest part, the widest part of the pattern. So you can mark from up here, you can mark from down here and see how many pips they are measuring on your charts. Uh, or you can take and draw you a line and put that line in there. I've got it a little long, so let me shorten it up a little bit, and then you can project that uh, down from the breakout, so roughly in that area. So it could break down roughly to 85 on the downside. If the break were to the upside, depending upon where it breaks out, let's just take the conservative route and say it breaks out about 90, then of course you would go to say about 93.50 or so on the upside. So you've got some huge directional moves coming in the euro pound. I think that's going to be quite interesting to see, because that's going to help set up a lot of strength and weakness in other euro crosses as well, other pound crosses. So this euro pound makes for a good gauge to what's going to happen in other euro and pound crosses like euro yen, pound yen, things of that sort. But and it'll help to tell you which one you would be better buying, and which would be the stronger of the two, and which one you would be better shorting, which would be the weaker of the two. But You can also deal directly with this pair itself and trade this pair itself as well. And the euro and the pound are about to diverge. Once again, they have been being somewhat similar here, but they're about to diverge greatly here, just like they did in this big directional move, just like they did in this big directional move, etc., and in these big directional moves. So we're about to come into a huge directional move again. You'll notice that that you had a smaller type of triangle right in here, where it went up and down and then broke and had a pretty big directional move. This one definitely was not a triangle, but you had a period of consolidation here, which was rangy and lower volatility that beget huge directional volatility. So I just want to point out to you that low periods and ranging periods should tip you off early to get ready and be on alert for a huge directional move to the upside or to the downside, because if you're there when the party starts, and these things break out, you can make quite significant gains. And once they make a huge bolt in one direction or the other, of course, you can move your stop up and protect your capital while allowing the trade to run. They can set up some really great risk to reward ratios. So that's the chart of the day. Thanks so much for watching. Bye bye.